Welcome to the Legacy Builders Podcast, where we are redefining generational wealth one story at a time. This is a first time for me, the first round two guest that I've had on the show. So welcome back, Zach.
Thank you.
I really enjoyed our first conversation and talking about, more of your story and your journey to get where you are today and kind of what you want to achieve in the future, right? But the reason why I really wanted to bring you on the show is because I recently had an experience with ProTrade, your bookkeeping firm, and it's a freaking night and day difference. I will say when we went through our audit, I was pretty dumbfounded on how much stuff you found, how much crap wasn't being done. And then when Katie started reaching out to me for all the cleaning stuff, I'll be honest, man, I was getting a little annoyed, but I knew it was for the greater good. And so I kind of wanted to talk through some of that. What kind of things are you looking for during your audit process?
Well, so the first kind of things that I go through is, first of all, I see if the information is actually in QuickBooks at all. Because a lot of the times I've seen stuff that just gets left in the bank feed, like the bank transactions tab. And if stuff gets left there, it's not actually showing up on any of your reports. And then if everything's entered, or if not, I'll take a note of it, but then we'll continue moving on. Then I look at the reconciliations. And then if the reconciliations are all done and up to date, I actually dive into the reconciliations to make sure they're done correctly, because I've seen a lot of the times where bank recs are done and it says that the banks are reconciled up to the current date, but they're not quite done correctly. There's still stuff that's unreconciled sitting in there, left over from a long time ago. I've seen stuff years back in there. But I kind of go through the steps of each section of what the bookkeeping should be doing. And then I look at the balance sheet. I make sure that everything on the balance sheet looks correct. A lot of the time I notice the balance sheet gets neglected a lot, because even a lot of bookkeepers don't know what those accounts do, what the balance or what undeposited funds is, what should there be in the balance sheet.
Dude, even I'm still a little confused sometimes. What's the difference for people? Just pretend I'm a fifth grader, right? What's the difference between P&L and a balance sheet?
So P&L is everything that is income and expenses. So if you spend money or make money, it shows up on the P&L, but only if it's an actual income or expense from an external source. If you're putting money into the business yourself, that's equity that you're putting into it, that shows up on the balance sheet. If you're spending money on a loan payment, well, that's a liability account, so that's going to be on the balance sheet. So there is times where cash will go in and out from the balance sheet accounts, but it's none of the stuff that is business expenses or the incomes, the sales money that you're making. So anything that you make or spend is on the P&L, and everything that your business has is on the balance sheet, if that makes sense. So if you have cash in a bank account, that's an asset account. The asset accounts are also things like inventory. You have your undeposited funds, which undeposited funds is basically just money that you haven't deposited that you've received. So your P&L will say, hey, you made this much money, but if it's still cash or it's still a check that's just sitting outside of your bank account, then on the balance sheet, it's showing up in your undeposited funds. As soon as you deposit it, then it moves from that account to your bank account. And so you want to make sure that undeposited funds stay zero as much as you can. Or at least it shows accurately what hasn't been deposited yet. And a lot of CRMs will automatically put it into undeposited funds until it syncs with QuickBooks, and then you'll sometimes have to manually move it. So I've seen a lot of CRMs that just bulk up the undeposited funds. Things don't match correctly, and so we have to reconcile that account to make sure it actually, everything did get deposited. That was actually something not too long ago. We had a HVAC company and we were reconciling it, and the undeposited funds, their CRM just kept putting everything in there. It built up. But after doing the rec, we realized there was 10 grand that didn't match up, that we really just could not find. And we were like, where is this 10 grand? And so we dove into it. He's like, well, I deposit every check I get. I don't know where it went. We started diving in. Eventually, he found it at the bottom of his work truck. He never deposited it.
Gosh, dang.
It just got lost in all of the other
10 grand, man.
10 grand. And he was like, can we cash this now? And I was like, it's 2 years over when they actually like gave the check. So I was like, no, you're going to have to reach out for a new one. It's been a little too long. So luckily they reached out, they got the other one because their accountant did a reconciliation, saw that it was never paid. And so he got his money. But yeah, 2 years later, it's crazy. And we all make human mistakes, you know? So it's like, that's why we're here. That's why we have to do those reconciliations. And I've seen so many bookkeepers that will just reconcile the bank account, like the checking or the savings, maybe the credit cards. It's like, no, reconcile all of them because money could get lost anywhere.
Yeah, there's so many directions I want to go with this, but I like with my experience with my CPA/bookkeeper, which again, it's a bad idea. You don't want to commingle them. But I did notice when I was sitting down having conversations with him and we were kind of going through the books that he would kind of lump some things together, categories together, and it always felt off to me, right? And so I noticed when, again, Katie was going through the books, like everything was meticulous. Everything has its place. Can you explain the importance of making sure that everything has line items, right? And everything is categorized correctly?
Yep, and notes. And notes are like everything. Like, and I've seen this from so many CPAs too, where they just like, they make a adjusting journal entry, they make some random entry, and it's like, what happened? I don't know because it's labeled like SL524. It's like, brother, you need to explain what these entries are doing because you as the owner need to be able to see that and say, oh, this is why this entry was made. Oh, he's moving money from the bank account to an asset account. Okay, well, like, let's see what happened. Did we already record that money going to an expense and then he's creating an entry? Now it's a duplicate. Like, there's so many things that could happen. We need to know why they're making the entry and then double check to make sure, again, things get reconciled, make sure the accounts show the actual story. And then, just make sure it all lines up with what the real story is.
Yeah. So we were talking a little bit about sellers finance, acquisitions, right? I'm currently going through an acquisition myself. And just out of pure curiosity, what do lenders look for with your books, right? Obviously they want P&Ls, they want tax returns, they want balance sheets, but what's important to them? And I guess what's the importance of, again, making sure your books are in line? I'm going to keep going back to that because, again, I've had a crappy experience for the last 3.5 years, and it's totally different now.
Yeah, well, I think it comes down to a couple different things, and each lender is going to kind of be a little bit different. But I mean, if they're looking at it, one of the things that I know I look at when I'm looking at a balance sheet to see if it's wrong is if there's negative balances in certain things. Because there shouldn't be any negative numbers. Maybe in equity, if you've drawn out money from the business and your equity is going down, whatever. And those usually you clear up at the end of the year anyway. But if there's ever like a negative liability account, like if I see a credit card that has negative $2,000, it's like, okay, did you actually make an overpayment of $2,000? Or is this a mistake? Odds are it's probably a mistake. If your checking account or like a savings account says negative whatever, it's like, you don't have negative dollars. Like there's some mistake here. And if there's a mistake in the balance sheet, I can't trust your P&L because if you're giving me a P&L that looks great, but your balance sheet has a bunch of errors on it, how do I know that your balance sheet or your P&L is telling the truth? Because it's referencing everything that's happening on the balance sheet.
Got it.
And so sometimes those are the things that I'll notice when I'm doing the review of the accounts. So I'm sure a lot of the lenders probably are looking at that too because they've been looking at it a long time. If they spot a mistake and they can't trust your books, then it's like, well, I don't know if this is the actual true story that you're giving me, so I'm just going to give it back,
Yeah, I was talking to your new CPA, Sean. I had a one-on-one with him, and he was like, yeah, working with Zach in ProTrade he's like, I can trust when I get books from his clients, right? If I work with somebody else, I'm spending an hour or two on the phone trying to figure out what's in the books and whatnot. So true testament to the service you provide, man. Yeah.
Thank you.
Can someone build generational wealth with average financial discipline?
Discipline? So I guess generational wealth, I don't think so. I think with discipline, like you need to have pretty good discipline for generational because and I've seen this a lot of times with just people that I've met is when people start making a lot more money, if they don't have the discipline to keep going in the same lifestyle that they have and not increasing their lifestyle above what this new influx of money provides, like they can go through it very quickly, right? I think discipline is one of the most important things when it comes to the generational because just like a business, you build policies and you follow those policies. And as soon as you stop following those policies, your business starts to see more cracks and issues, right?
Yeah.
It's the same thing in your personal life, I think, is like when you're starting to bring that money in, you need to have your own personal policies of, okay, this is our spending limit. Even if we're making like 10x more, this is still our spend, right? I'm not going to go buy this new boat because I made a bunch of money, because now you got a depreciable asset, and you're not going to build generational wealth that way. You're going to build generational wealth by making sure when you're spending that money that it's going towards something that's increasing your income further, right? And so, like, one of the things I was just talking about with one of my clients too is building up a cash reserve and putting excess into like an investment account. And then that investment account can then be used if in the future you want to do an acquisition, if you want to purchase real estate, you want to do all that kind of stuff. You're building up this investment account that is still growing on its own, but it's liquid enough to where if you need to pull it out to buy like a real estate or an acquisition, things like that, you can just pull it out. But until then, it's making more capital, and you still have your cash reserve to make sure that your business is stable enough to survive if income starts depleting. And I was looking at a lot of the most successful companies and kind of a lot of my clients too that are like the most successful that I've seen, and just kind of mimicking it and saying like, okay, their normal cash reserves tend to be around 25-30% of their annual expenditure, right? It's like, okay, so let me, for my business, project what my annual expense is going to be and try to save. I'm doing about 30-35%. I'm trying to be a little bit more conservative. But having some kind of cash reserve, make sure you're safe, but then having excess, not go into my pocket, go into the investment account so the business can continue to rack that number up, make more and more money every year. And if I need to do an acquisition, I say, okay, how much do I have in the investment account? That's basically like the savings. Take it from that to then put into the acquisition, as long as the ROI is higher than what my actual investment's going to be, right? And that's where you can get into real math. As long as your books are all in order and you can see, okay, what's my profitability if I spend this much money to get this many accounts, and this is how much revenue it's making. Here's my expenditures for that, versus I'm making an average like 8% return on this investment account. Is it better to keep it there or do this acquisition? And then you can start looking at it.
I'm actually really curious about that, because I have my operating account and then I have a money market account, which I thought was earning 5%. It's only earning like 2 or 3%, something I found out, right? So for a long time, I've been like, man, I kind of just want to get a stock portfolio, have it liquid-ish. So I understand the nuts and bolts of that, but how is that actually tracked in the books, or does it get tracked in the books?
So yeah, you can have it tracked in the books, and a lot of the times people kind of just track it if it's like withdrawn from the account and like record their capital gains or whatever. You can technically get statements every month, pull your actual statement of growth, and then record the balance going up and down, but then not actually putting it into the income account as realized until it's withdrawn, because then it just stays in that balance sheet, so it's not affecting your P&L. But yeah, most people, what they'll do is they'll just put it in and they'll say that's the balance, and then when they take it out, realize it, put it on the income, on the P&L, or if it's a loss, you can record that as well. We usually have a category that's just called gain or loss on investment. So it's like we can see if it went up, then it's a positive number. If it went down, then it's a negative number, but it's that gain or loss account. So
interesting. I got to dig into it a little more.
Yeah. It's
who doesn't want to make free money, right?
Yep.
Yeah. Follow-up question to that, because you touched on something. So when you're working with clients and you're kind of digging in books, I'm sure you learn a lot of best practices.
Oh, I do. Yeah.
Right. So how often, it's one thing learning something, it's another thing applying them. So how often do you find yourself applying those practices to your own business?
I usually, when I see different things, it is interesting, because being the accountant, you get to dive into so many different companies, and you get to feel like you're almost like a private investigator sometimes. So you're looking for like, what's the real story of what's happening, because I'm doing a cleanup or whatever. But there's lots of times, I'm working with very successful people, and it's like, oh shoot, like doing this thing is so smart. Why didn't I think of that?
Yeah.
And what I usually do is, okay, that's a really good idea. I love how it's impacted their business. Let me see, what would it look like if I implemented it in my business, if it's practical, because sometimes industry-wide, it's just different industries can't really do it. Sometimes it is. And if I can mimic it, then I'm like, okay, cool. Let me talk to them and figure out, because I mean, I'm their accountant. I talk to them anyway.
Yeah.
So it's like, let me talk to you and figure out, how did you do this? Why did you do this? What was like the idea behind it? Because I like to get context. I like to get the story and then figure out, okay, now if I still like the idea, it was a good idea, I think it's going to work for my business, I've talked to them on how to do it, now I can go in and actually implement it. But that's just kind of how I work. I like to do context, dig in, figure out the story, and then decide if I want to implement.
That's pretty dope, man. I like it.
I have a very streamlined process.
I would take full advantage of that too. You know, what does actually? Hold on, let me ask you this: do you feel like messy bookkeeping is a leadership issue?
It can be. I'd say. I mean, yes, technically, because leadership should know how to double check the books and make sure they're right. And if they're not, if the person in charge of it is not fixing it, the person in charge should get someone to fix it, right? But at the same time, it's like, I understand it's a busy world, you know. It's like when you're running a business, you have so many things on your plate, you're trying to figure it out, and it is hard for them, especially if they really don't know how to check and see, like, okay, what is the balance sheet supposed to look like? What is the P&L supposed to look like? What is my statement of cash flow even telling me? You know, like all of these questions. If they don't know it and they just don't have time, it becomes really difficult. I'd still say it is a leadership issue. They should go and try to seek it out and should try to learn it. But yeah, it's kind of a tough one. I don't want to be like, yeah, it's their fault, but it's like, it is kind of their fault.
I think it kind of is. And the reason I ask that too is because I kind of struggle with this sometimes.
Yeah.
Like I have clean books now. I can look at the numbers, but sometimes even for me, I'm like, well, okay, now what decision do I make? You know? And so I don't want to go too far into go high level CRM, right? But I'm in a situation with headquarters where I had to adopt HubSpot, and for me, it looks like more of a sales tracking tool versus an executive style dashboard where I can easily make decisions. And so now when I look at QuickBooks, I'm like, man, is there a way that I can do that, right? With my CRM sales enablement, but then also on the financial piece, on the financial side, like where do I make budget cuts? Do you have any best practices for that?
So first of all, I always just recommend going through the numbers month by month for the past couple months. And that's why we always send out our reports for multiple months, not just like, here's last month's P&L, here's last month's balance sheet. We send it for multiple months, month by month, so you can look at it. Because I find a lot of people, even if they don't have a lot of experience in accounting, if they look at it month by month, our brains kind of already can register and see, okay, like a line, you know, going up or down and kind of connecting the dots to them,
visual,
and seeing the trend. And so then it becomes the question of, let's say it's like, I really want to look at adopting another software, but it's going to cost a lot of money. And like, let's figure this out. How much is that going to cost? Well, now if I'm looking at my P&L and I'm seeing our expenses slowly going up and our income slowly going up, but then like we're having some decreases. I look in the previous year and we're about to hit like a downturn that we constantly hit every year. Well, now I'm like, maybe I shouldn't make this purchase yet. Maybe I should wait until April. It looks like April is usually when we start getting our numbers back up. That's when I want to actually make that decision to actually switch to the software. For now, let me look into it, see what it's going to take, but not execute until I know we're going to be hitting that upturn. But yeah, it's like when you're just looking at the financials over a period of time and you're looking at the decision you want to make, it becomes very easy to use the books to make that decision, as long as you're looking at a wide enough time frame. You know, it's like your brain will kind of connect it yourself.
Yeah,
it's just a matter of pulling the books up, reading them as the story that they are, and then whatever decision you're trying to make, just ask that question while looking at the books. You know?
Yeah, that makes sense. I kind of feel like you're in the same category, but I like playing or testing out new softwares and new toys, right? I see something, I'm like, oh, I want to try that out so bad. Are there any times like with you in your business where you're like, you know what, screw it, I'm going to try it? And then if so, how long do you try it before you just cut it out?
Yeah, I try things all the time.
Yeah.
And I feel like that's kind of a lot of what I do now, especially having like Katie doing so much of the books and like taking a lot of the weight off my shoulders for that. It gives me the opportunity to dive into the new AI systems, the new things to stay ahead of the game and make sure that we're always advancing, always doing the best. Yeah, I usually play with a bunch of them. And then after probably like a week or two of me just playing with it and not actually like using it for any clients or anything like that, and just kind of test stuff, I'll usually be like, okay, let me go to one of my clients that I know is going to be okay with me just trying something and being like, okay, here's the software. We're going to watch it carefully. If it messes anything up, we can fix it.
Yeah.
Like it's the books. Like that's one thing I like about bookkeeping is if something breaks, we can go back and fix it. Nothing is completely breakable in QuickBooks. And we have audit logs, but I'll implement it. We'll watch it closely and we'll be like, okay, is this saving Katie time on that client? Is it something that is taking longer but more accurate? And then I'll kind of look at that and I'll be like, okay, and we'll do that. And it depends on the software. We did actually just try a new time tracking software, and it seems like it's a lot more streamlined and accurate. So it has like all the features that we need for time tracking and being able to allocate it to the specific clients. I did it for an entire month myself, and Katie was just using her old system that we had built out already. So she already knew it. And toward the end of the month, I was like, this software is much better. Like I've been able to track my time a lot more accurately. I was still tracking my own time in the other software, so I was actually doubling it up, but I just wanted to make sure it was really good. But once I figured out it was good and it was working really well, after that month, I was like, okay, this next month, the very first day, Katie, you're going to start tracking your time in here, track your time in the other one until the very end of the month. That way we can compile the data from that and then just move forward on this new software. So I like to make sure, basically, if we use systems, we use both of them until we know we can switch to the other one. Because, I never want to be in the situation where it's like, let's switch to this software. Oh, shoot, it broke. Now we got to go back and fix things and
Been there a few
whatever.
times.
Yeah. So I always try to do both of them at the same time until we know that we can rely on just the one. And if we can't use that one, and if it is like broken, then it's like, okay, well, we're still using that other one. Just keep using it. But if it is good, and it's like, okay, switch on the first day of the month, next month, and then we just pick up from there. So it's like,
man, so you really entrench yourself in 1 to 2 weeks. You're like, I'm gonna test.
Yeah.
Dang, dude, I need to cut down my testing time because I usually go sometimes 2 months or a full quarter.
Oh yeah.
When I try something out, yeah, unless I'm gonna be locked into like an annual contract, and I'm like, nah, screw that. You have to show me the value first before I'm gonna commit to something.
Yeah.
Dang,
that is a tough
that's
one.
crazy. All right, I gotta speed it up.
I mean, yeah, I guess it depends on the software.
Yeah.
That is like, because I mean, a time tracker, it's like, yeah, a month is fine, but it could be something else. I guess if it's like a new full AI assistant or something, I don't know. Like, I don't know what else is going to be coming out soon, but yeah. And I always avoid all of the AI manual entry ones, like, because there's a lot of softwares that will say they do automatic entries. And I've seen a lot of companies get screwed over from those. So we're avoiding all of the ones that actually make entries, just the ones that flag stuff for us to review it. Because you don't want the computer go in and just ruin a bunch of stuff that you now have to take hours to fix.
Yeah, dude. Man, that's crazy.
But yeah.
What are 3 numbers every business owner should track?
Well, I mean, obviously you want to be tracking your incomes and expenses. I think it kind of depends. But I really like to track incomes by avenue, because diversification is something that we're all kind of told. And some of us have a hard time adopting because we're so focused on the thing that we do. But eventually we all will diversify our income at some point. But being able to track those separately. And so being able to, like, instead of having the sales account being like sales and then a sub account for this one specific thing, this one specific thing, this one specific thing. And so you can actually kind of see what's most profitable, because as a business owner, obviously we need to be adaptable. We need to be able to be like, I think this is a good idea, but everybody else that's buying it thinks this other thing is good. I need to be able to be like, okay, I admit this thing that I really want to do is like nothing compared to what everyone else wants me to do. Let me pivot. Let me focus on that. And now I can start focusing my marketing on it, my advertising, like all that. I can start pushing it more into our sales teams.
So,
yeah.
so when you say expand, you don't necessarily mean like in other ventures, right? Buy businesses or buy real estate. You mean like kind of within your business. Take for example my dog training business. Bread and butter service is board and train, but I also make money from boarding. I also make money from daycare. So kind of growing or upsells too, and keep track of those.
Exactly.
Okay,
Yeah.
got it.
And that's really important too, because like I have a car detailer that he's one of our clients, and he was basically looking at doing just interior exterior stuff. He started adding ceramic coatings. He started adding a couple different things. But once we started tracking the different incomes, we realized that he had like 20 or 30% coming from mold remediation.
Oh, wow. That's crazy.
It was just a random thing that he was like, yeah, we do mold remediation, because most detailers will just detail it like normal, vacuum it up, but not get rid of the actual spores, not get rid of like not take it seriously. So he's like, look, it's going to cost more money, but we're going to do this the right way. So he started doing mold remediation. And when we saw that it was like 20, 30% of his entire income, we were like, wow, we really need to like do some advertising on this, because obviously this is a problem. He's over in Washington. So yeah, it's a big problem over there. And he made a couple ads, started getting it, and it's still one of his biggest like money makers.
That's so huge, dude.
You never find out unless you actually track those numbers and find them. Once you do track them and you do see, oh, okay, that is a really important thing. Now I can not just say I'm not going to do the regular interior and exterior details, but I'm going to be like, I'm not going to just market the interior exterior. I'm going to market mold remediation, because without marketing, if it's our biggest thing, what would it be with marketing? You know? So,
man, that's pretty damn awesome.
Yeah, it's crazy what the books can tell you. Yeah. So that's one of the things that I would say is really important to track, is figuring out what income sources are doing like how good in different areas. Another one that I like, and this uses we use the class structure for this, but it's being able to separate P&Ls by a specific thing. So like I have some GCs that do residential and commercial, right? And so we'll have a class that is residential and a class that is commercial. So you can pull your P&L and say, you know, full remodels, handyman work, whatever, but then have two P&Ls, one for all of those income types for residential and one for all of those income types on commercial. And so they can be like, okay, my like, I don't know, like if it's a roofing company, if they're like, okay, cool, we did commercial, we made this much money, but we spent this much money. Oh, our net at the end of the day was like barely anything. Whereas the residential, we didn't make near as much money income wise, but our expenses were not near as high. So we actually made a ton more money. They can be like, okay, why am I working so hard for these commercial jobs when our net comes out so much less? If I just focus on residential, like I'm going to make a lot more money and it's going to free me up a lot more time if I just focus on it. So it's like being able to separate that, or find things in your business that you're like, it would be nice to have a P&L for one thing and a P&L for another, and still be able to pull a P&L for both. Right.
Damn.
And so that is another kind of layer of tracking that's really important. And then the next layer after that is like the specific job costing that we like to do. And that's more of like if you have, let's say, a commercial job and this vendor has like 6 jobs for you at the same time, you're like, okay, I have to do this project, this project, this project. Instead of being able to be like, I'm making money on overall, like we're profitable. But if you could take each job in particular and look at the profitability of each one and be like, okay, these 3 I made money on, these 2 I actually lost a lot of money on. What happened there? Now you can figure out, oh, those 2 I actually bid really low on, apparently. Like it cost us way more in material than I thought it was going to, or whatever. Now, if all of your jobs can be profitable, how much more money will you make overall? So we really dive into like very specific, granular profitabilities.
Damn, that's powerful, man. Everybody out there listening, take notes.
Yeah.
That's Brad Lee's term, but he's dropping bombs over here. All right. Okay. So for people out there who maybe they're not necessarily dissatisfied with their bookkeeper or their CPA, right? But maybe they just people don't know what they don't know. I fall into that category, right? And I can admit it. But if somebody was going to question their current bookkeeper, or maybe even CPA, because you know a little bit about that world, what are 5 questions they should ask themselves to determine if they need to start looking elsewhere? Maybe even go to ProTrade.
Yeah, I would say the first thing to do is look at the balance sheet, because the balance sheet, again, is where you would look at and see if you see anything that's off, you know you can't trust your P&L. right? If your bank balance is nowhere near close to what it should be at the date that it was actually like reconciled for, let's say your last reconciliation was the 31st of January, right? If you look at your balance sheet for the 31st of January and your bank balance should have been at like, 200K, but then you look at it and on the balance sheet, it says that it was at like 600K. Then it's like, what happened? Like you can now not trust the expenses or the incomes because there's something missing here, right? It's like if there's vast differences between reality and what the balance sheet says, you can't trust your P&L. So every time you're looking at that to make a decision, you may be basing it off of something that's completely wrong.
Yeah.
So that's the first place I would look. Look at your balance sheet and say, okay, at this point of time, and it's important to know for the balance sheet, it is a statement that says, here is your financial position at this point in time. So if it is not if it's not reflecting your actual financial position at that point in time, then something's wrong, right? That's the number one place I always go to. The second thing to look for is, it kind of takes a little bit of QuickBooks navigational ability. So if you're not super familiar with QuickBooks, dive into your QuickBooks and look around. You're going to want to learn how to navigate and see some stuff. But look at your bank transactions and see if the stuff is actually in QuickBooks. Like I said, that's usually my first place I check, because if there's a bunch of stuff sitting in there from previous months, it's obviously not reconciled because it's sitting there in the bank transactions. And if it is, they haven't cleared it out from the bank transactions. And so it's easy for duplicates to occur. Look at the bank transactions, see if there's anything in there from previous months. And then go to your reconciliations and see, does it say last statement ending date like was last month, or does it say last statement ending date was 6 months ago? And then it's like, oh, these haven't been reconciled in 6 months. There's an issue, especially if you're paying monthly for bookkeeping.
Yeah,
happens a lot.
Yeah. So you're talking more from like an auditing standpoint in QuickBooks, right? But like, what if I'm like, I'm not QuickBooks savvy or whatever. What if I wanted to pick up the phone and call my bookkeeper and give him some gotcha questions?
Yeah.
Right. Like, how do I catch him or her, and I guess catch them not doing what they're supposed to do? Or is that possible? Without looking at the books and seeing the work?
Yeah. It's tough without looking at the books. And actually seeing like what's going on, because it's easy for people to come up with stories or say whatever.
True.
And that's why it's really important to double check the books and at least have enough knowledge to go in and double check some of the work. Because if you can't, then there's no one to do it. And that's why we do the free reviews, because it's like we will go in and just double check and just say, hey, by the way, we looked at the audit log. They haven't logged in 6 months. They haven't logged in like 4 months. Maybe something that you want to talk to them about. And then you can talk to them and be like, hey, we're paying for monthly bookkeeping, but like, when was the last time that you logged into our account?
If you can get a hold of them, sometimes it takes a week and a half, man. You guys are so quick, like within 24 hours, boom. Yeah. It's amazing.
I don't know how, but it's always been an issue with CPAs getting a hold of them. And tax season gets busy and people like to overload their schedule because they're like, if I can just fill my entire schedule with money and then just focus on the stuff that's on fire, they make really good margins, right?
Yeah.
But that's the problem with accounting, is like they'll try to get as much work as possible and then just knock out the stuff that's on fire and not pay attention to the other stuff until way later. And then it's like, come on, man, I have my business that I'm trying to run. I need you to be on the game too.
Yeah.
And so I've always hated that, but
dang.
And that's why we're very fast on our response times, because I'm like, I want to make sure everybody knows, like, we are doing it all the time. And it may get annoying, especially at the beginning, because it's like, these guys won't stop asking me questions. But it's like, I'd rather you get annoyed from us asking too many questions than to not have your stuff get done.
Oh yeah, right? For anybody who's been on the opposite side where you don't know what's going on, it might take you a while to get a response, and then going from that to like immediate response or the day, like 24 hours again, it's a completely different experience. So yeah. So last time you were here, we talked a little bit about generational wealth, what that meant to you. Has it shifted over the last 2 months, or is it still the same?
I would say, it's basically stayed the same. I still just kind of focus on that generational wealth of being like, okay, let me continue to build this up and, again, put the money where it's making more money and continue to grow and scale. And, I don't want to have my future like grandkids be like, oh man, I really want to go into this profession, but I can't afford it. It's like, if I could be like, my grandkids are like, I want to become a diesel mechanic. It's like, cool, let me just get you all the equipment you need to learn it at a young age, because then you could become some prodigy, you know, like, and everyone's like, man, how did they do that? It's like, well, they started young because the equipment costs a lot of money, but I can afford it. I can just give it to them. And yeah, I think generational wealth for me is a lot of that. Like, my whole legacy doesn't have to give up on a dream just because they can't afford it, you know?
Yeah.
So,
What projects are you working on that are exciting you right now?
Man, there's so many different things. I'm working on, well, we've been building out a bunch of stuff for the Go High level. So we've been really like diving into it, building out so many different systems for my accounting firms and also for a bunch of other people. We've been trying to teach people on how to use it because it's just so powerful. And so many people are like, using their own system that they've been using for a while now, but it's just not able to do certain things.
Yeah.
And Go High Level is just so good at, like, it can do so much. It's so powerful. And so just kind of as a passion project, I've been helping out people learn how to use it, figure it out, teaching how to set up the automations, how to, build the different forms and how to track the different things.
Yeah.
We just built a form for the nonprofit accounting firm. So now people can actually go in and use the secure upload that gets sent to them in this form so they can upload their financials. And then we can do the review on them without ever having to have like emails sent with the financial documentation. And then we can see, like, as soon as it gets uploaded, click rates, and like if someone clicks it but doesn't submit it, then we can be like, oh, they didn't submit it but they clicked it, so let me reach out and just see, hey, did you guys have a problem? Like, what happened? It gives us all of the data, and I love being able to see that data and give it to our sales team and be like, here's how you can improve and improve and improve. And here's all the data you need, and streamlined it. So now our sales team just clicks a button, drags it over to another bucket. They get the form, they upload it, they do all that. We get all the information. Our accounting team can review it. They can do all of their stuff, send it back. Then the salesperson then just clicks and drags it to the next one. Okay, that's done. And then it sends them a booking link so they can schedule with the salesperson, go through the quote, go through all that. It's just like a 1-2 done, like super streamlined.
Yeah.
So
damn, that's dope.
It's it's been super fun. I love working on the automations, the systems, and just all that. Yeah,
that's pretty awesome, man. Well, I really appreciated the conversation, dude. This is, I think, more to feed myself too, because I was so curious on a lot of things. But again, I think y'all are doing a tremendous job, and even just in the short amount of time of working with you and the team, it's been really, really cool. So I'd like to open the floor to you, like give your 30-second, 1-minute pitch to everybody out there. Why ProTrade? Why Zach and your team?
Yeah, well, at ProTrade Bookkeeping, if you get down and dirty, we keep the books clean. And we're here to kind of separate ourselves in the accounting industry, be more transparent, be more open, and make sure things get done right. So I guess the biggest thing is we'll do a free review of the books, pro bono, like there's no commitment. We just review the accounting software, see what's going on. We can be the double check that you need to kind of look at your stuff. And if there is something wrong, we'll send you a full report of here's everything that we found that was wrong, or maybe not necessarily wrong, but like just not quite good, like we can have that in there. And if everything does look good, then we send back green flags. We're like, hey, you're good to go. It's like your person is doing a great job. But at least you have that peace of mind to know it. So that's kind of the whole point of that.
How can people find you, man? I'll obviously post your LinkedIn bio and then your website, but
yeah, I mean, LinkedIn and the website are the main two. We have LinkedIn, or we have Instagram, we have Facebook, we have YouTube. We don't really post a ton to YouTube yet. Hopefully we'll be posting more stuff there. I'd say LinkedIn and the website are the big ones. We have the form on the website you can fill out if you want more information. So just go fill that out if you want more.
So dope, man. Sounds good. Hey, appreciate you being on again, brother. We'll have to have you on again for round 3.
Thank you. Will do.
All right.